everybody. We are getting ready to trade August, week 2, 2020. Here is the weekly chart of S&P 500. Here is the gap that we took on over the course of the last 2 weeks and finally filled on Friday, Thursday and Friday. And it leads back here to where we really fell off the cliff right after making the all-time high. During the week that we made the all-time high in February, at the end of that week, here's where we closed at 33.3775, and then we gapped down open the following week. And from there on, we sold off down to what became the 2020 low. And here we are, flash forward 5 months, just about 5 months, and here we are in August, and we are, finally filling this gap. Right now, the close that we made on Friday, up here at 33.5128, that is your second highest weekly close out of the whole year. And your second highest close of all time on a weekly basis. Here's your highest weekly all-time closing high. Here is 33.8509. So if the market wanted to try and do a sort of double top thing here, without even having to get all the way up to the all-time high, we could do that by simply closing lower next week, below 33.51, and one could easily call this, a double top, and then, we go on and sell from there. So that's just an idea there, putting a little more pressure on the need to close higher than 33.5128 at the end of next week. And also, if we close above 33.85 without making a new all-time high, that's probably going to guarantee then something bullish for the following week, going into monthly OPEX week for August. So it's really important to keep an eye on the weekly chart, because as you can see, we are really at the, at the breaking point here of where we could either double top or we could break out to brand new all-time highs and, maybe move on to 3,500 or 3,600. I've seen some people even talking about that, but I really feel like there's absolutely no reason whatsoever for us to be making a new all-time high right now, other than just the sheer act of squeezing shorts. Okay, here is the daily chart completely cleared away. This is the roadmap chart that I show you all the time, but with all of the levels and information taken off of it. And this 51 handle is something that we've come back to again and again. It started back here where we were in the midst, the heat of our sell-off, when the 10-day crossed down through the 200-day simple moving average. And from that happened at 30.5150, and then as we came back up to 30.5150 in the recovery, you can see that there was some back and forth, some support and resistance at this level. And once we took it out, we moved up 100 points. And 31.51 became a big support resistance level for us. Here was June, where we made that breakout high on that first big, beat on non-farm payrolls. And then we had the Fed meeting at the end of that week, or the middle of that following week after non-farm payrolls. And then we had this huge gap down in June. And when we came back up off of that, we couldn't get through. This was like iron resistance, this 31.51 to about 53 level, until finally we got into July and we took that out. And then lo and behold, 100 more points later, we got to 32.51, and this became our band of resistance in the final 2 weeks of July. And it took us a new month to gap up over this and move on. And here we are closing on Friday of this week at 33.51. So maybe there's something to this level. Maybe we are really not going to make much more progress above this, or maybe we are, and this is going to become some sort of support for us as we go on to new all-time highs, and it will take a break and a close below this 33.51 level to get us back going again. So here it was always resistance, and now maybe it's going to be quickly taken out and made support, something different than what we've seen before, or it's just a repeat of what we've seen, and we are going to spend the next couple of weeks at least trying and struggling to get through this 33.51 level. We might take a look above it, we might get a single close above it, but then we get a correction for a couple of days, and then we come back and we try again, and that's pretty much been the story of these levels as we've gone up. So just wanted to point out this pattern of this, when we get to this 50 handle, 51, when we take a look over 50 and we go to like 51 to 53, we seem to get some kind of push and pull and fight going on. Here is our intraday chart, and this is what happened on Friday. You can see we established our initial balance period, and as soon as we established it, we broke out of it and we took a look up here, trying to take that look up above 33.51, and then we fell back, and as we finally broke down below 33.37, I think this should be, say, 75, not 45, but anyway, whatever, this 33.37 handle. once we finally broke down through this in the afternoon, I mean, it really looks like this was it. We were finally going to sort of roll over. But look at what level ended up holding us. This 33.28 level. This was the low of the day on February 21st. The close is that 33.37 handle. So this is what we had been trying to take out earlier in the week and failing to do so, and then we broke out over it. And then it came back and it held us as support on Friday. So these levels from February 21st are still very important, and I'm going to kind of rearrange the levels list so that we look at those. And basically what we've been doing this week, this first week of August, is just going on and taking a step up, making a gap up open, and sitting for 2 days, making that that low and that gap up support, and then moving on. So this is an active transitioning value, transitioning value higher and higher. So if that's the case, then we should have a mild day on Monday where we establish support here, maybe along this 33.28 level. So maybe we're going to pull back once again to try and hold a higher low against Friday and repeat this pattern and sort of hold this open as support and then move on and try to, make something new support above it. And I would guess that it's going to be the next new level above it will be trying to make support at that 33.51 level. But anyway, that's what's been going on an intraday basis. And then finally, let's just look at the roadmap here. Here we are. We're at our new closing high. The next thing on the agenda for us to go after is this next big gap that goes from the high on the 21st of February. So we've really sort of ground ourselves through all these February 21st levels. And now we've got to take a look above the high from that day and look to the next gap above it, which is the close from the 20th. So this is Friday the 21st, and then Thursday the 20th. That's the next gap to fill, from 33.60 to 33.73. And here we are once again in the running through the 80 handle rule. So quickly we've gotten here to the 80 handle rule in the 3300s. So we've closed above 33.50. We're going to try and make a move against 33.60, and then to get through this gap, try and make a move against 33.80. And if we get through 33.80, then we're going to go on for 3400 if we're following simply the 80 handle rule through those levels. 34.05 represents where the equivalent, using the spread that we've got right now at this point in time, it's about 7.5 to 8 points, the difference between what ES and S&P 500 trades at during the day. If we go and resolve the all-time high that was made on ES, ES made its all-time high when it opened up for the overnight session the day after S&P made its all-time high. And the equivalent level now would take S&P all the way to 34.05. So I think there's probably, this is going to finally get resolved. If I said a little earlier in the video, I don't really understand what's keeping us higher other than shorts getting squeezed. Well, it could be this as well. We've got to get back and resolve this level. And once we resolve this level, as long as ES doesn't go and open up the next day and make a new high overnight, then the game is over and we can finally correct off after we've got ES and the S&P 500 making a new all-time high together in unison in the light of day, and not ES going back and doing it after dark, leaving a level that the S&P's got to come back to and resolve at some point. So maybe that's really the agenda here that we've got to take care of. If we get them in this gap and just roll over and fail next week, we've got the 10-day simple moving average moving up very quickly. This is always going to be our first line of defense. And of course, these two gaps that we left in our wake in the first week of August. So you can see the 10-day has risen all the way through this first gap. And by Tuesday or so, it's probably going to be looking into this second gap that we made. So here was Monday and Tuesday, here was Wednesday and Thursday, and here was Friday. So maybe if we don't get a higher high on Monday over the one that we made on Friday and we begin to roll over, maybe we're looking for a move back to the 10-day. And if the 10-day breaks, then we look to the 20-day. And if the 20-day breaks, that's where we really start getting into a meaty correction where we can possibly get down here all the way to the 50-day. And if I bring back one more chart here, yes, good, I picked the right one. So here's our 10-day, here's our 20-day. You can see that in the past, yeah, we make some breaks at the 10-day, but pretty much the 20-day has held all of our dips, going all the way back here to, what was going on at the end of June when we had this gap down open after the Fed. So that's the last time we really broke the 20-day and went and danced with the 50-day simple moving average. So it would be that kind of a move that we're seeing back then. So if we only look below the 10-day and hold the 20-day, that's it. You know, you've got to, you know, stop buying puts and look at calls, or step aside and let the upside play out. But if the 20-day breaks, we've got a good chance of a pretty nice fall here between the 10-day, between the 20-day and the 50-day simple moving average. That would be our next target. Okay, that's it. Have a great rest of your weekend. I hope this video helped you out and gave you a better understanding of where things are at. As always, good luck and good trading.